And gold's risky. I haven't traded gold in a while, but I feel like I probably should since how the market's moving. But the problem with gold is I'm not sure when it'll come back down, you know, because it's super overextended. Like a lot of people are asking if they should buy. I mean, we should have just kept buying whenever we got a buy signal.
Exactly. Or just they kept them going up after every buy signal. But it has to retrace, man. It has to. So it may spike up one last time, maybe to like 2100, then spike, spike down, retrace, consolidate before moving back up.
Yeah, because I was waiting for that pullback. You know, I was waiting for if there was a pullback, then we could catch it as it comes down, or even if it comes like you could even put a buy or not even a buy limit. You'd wait for it to come down and test the K2 pivots, and then just catch it as it swings back up. I mean, that's probably the safest way to do it, because like the last thing you want to do is catch it and it comes down heavy, which it's bound to happen.
I was looking at, I think it was Euro CAD, bro. It had it rejected up the K2 pivot before skyrocketing up. Euro CAD.
Was that your okay? Oh, that was one that we were in, right? Yeah.
I mean,
Yeah, it was right here. It was a pivot entry. I mean, it's still on its way to full TP. It's like halfway there.
Yeah, that's crazy. Yeah, that's also one guy yesterday to like not to overreact and stuff like that. It's gonna hit TP. People how you get in our chat.
Yeah, exactly. Let's see. So we still got the AU. AU isn't even moving. So
Yeah.
I think once we hit TP1 over here, I'm probably gonna move stop loss. Oh, we already hit TP1 now, or no, we didn't. Actually, no. TP1 is right here. Yeah. But it's like barely moved since we entered this trade. Let's see. It's probably moved like less than 10 pips in the past like 8 hours.
Maybe it's gonna be bad. It should be bad. They said 1 million people they apply for unemployment. I think like yesterday or something like that, or within the past week. So I don't know. It should be bad data.
Yeah. I mean, the US dollar is weak regardless. It's been super weak, and it's weak across the board. So I'm expecting it to shoot up at least X amount before we reach NFP. But Euro CAD's looking good. Let's see what else we got here. This was an entry that I saw earlier, but I didn't call it because it was within the zone, and there was another zone that was within this area. So if I turn on the SRs, you can see that there was a zone right there. So I didn't call this, even though it was a move that could have met at the low of this area right here, which is about 40 pips. I was gonna call it, but it was just too risky because it could either do that and then it could break below, or we could probably see it reject back off. And that's why I didn't call it. I should have just made an unofficial call, but it's all good. It just gets riskier as we get closer to NFP. Let's see. This is our GCAD from earlier. Actually, this hit TP already, so I'll take this off. So this is our GCAD from earlier, full TP. What else we got? NZDCHF. I mean, I feel bad for whoever didn't get out of this trade because I got out of this yesterday when it's one.
You caught this yesterday?
Yeah. Oh no, 2 days ago on the 4th. So I called it on the 4th, and it didn't fill until yesterday. So like this morning or yesterday morning at 6. I know some people got filled because they were, depending on their broker, because their spread was too wide. So they got filled, but mine didn't get filled until this morning or yesterday morning. And then I got out when it dropped. It dropped like 20 pips. I got out once it hit there. I moved my stop loss and profit, and I just got out of it. But it might still come down. Like it's right here rejecting off the pivot, so it might continue down. I just don't know when or where. I mean, because there's a pivot here, and there's also the zone that rejected off up here.
True, it's like double confirmation. So yeah, strong chance that it continue down.
Yeah, there's a chance of it dropping. I should probably draw another zone there just so we know. The Gulad said, do you think EN will continue downtrend? I'll pull that up right now next. But yeah, guys, now that people are coming into the room, if you guys have questions, feel free to put them in the Q&A, and then I can go over, any pair you guys want me to look at, or if you guys want to see any strategies. I know there's some new people in here that want to see, a breakdown of the K2 strategies and a preview of the course. So I'll show that a little later. But right now, if you guys have any questions regarding, any specific pairs you want me to analyze, feel free to put them in the Q&A, and then we can get through those questions. But right now, we're just looking at NZDCHF. This is one of the calls that we made about 2 days ago. We called it way over here, but it didn't fill until yesterday morning, right here at 6 a.m. And then we wrote it down, and then I exited somewhere around here. It was sometime this morning. So I exited once it hit TP1, and then retraced back pretty hard. Otherwise, the rest of our positions are looking really good. So NZD USD, we're almost here at full TP for 52 pips. I have this mark. I was going to call this earlier, but I didn't. And then our UJ position right here as well. It's pretty deep in profit. So it's in profit about how many pips? Let's see. It's been in profit well over 45 pips. Obviously, we're traced up, and then it's just it's pretty much going sideways, but slowly dropping. So I think everything looks pretty good. Like our UJ sell looks good. Our NU buy looks good. It's about to hit full TP for 52 pips. Our your CAD's good too. Let's see. Your CAD is in profit about 60, like nearly 60 pips. Full TP's at 85 pips, so that's pretty good. And also with our AU. So our AU, we have two positions active right now. We have our old one right here from the 4th, 2 days ago. It's already hit TP1 and TP2, I believe. So most people already got out of this trade once it hit TP2 for, I think it was about 40 pips. So that's like $400 if you're trading a standard lot. But we do have this other one, this twin position from today, that's moving in the same direction. So I'm anticipating that to hit probably before London session for about 15 pips. So once it reaches 15, like once it reaches TP1, I recommend that, you move your stop loss and profit because it's NFP tomorrow. And, once it gets closer to NFP, the market usually dies down. And then once we actually hit NFP, you're going to see some crazy spikes. But yeah, that's about it for our active trades right now. I'll look over Euro NZD right now for Palad. So yeah, let's pull up Euro NZD. Right here, it's in a pretty strong uptrend, and then it's retracing right here. The reason for the retracement is due to the testing of the zone right here. So it came up, tested the zone, rejected, came down, rejected off the pivots, and then it came back up, rejected off here, and then it's coming back down. So I still have a buy bias on this because it hasn't passed the pivots yet. Obviously it's still moving in a upwards trend. It's just in a retracement right now or a pullback. So if you zoom out, this is a pretty strong trend up. It came up, came down, consolidated, came down here, rejected off the support, and it shot way up here. So this was a huge move. It was bound to retrace at some point, and this is where it decided to retrace from. Let me see if there's any other zones that are nearby. No, so it doesn't look like there's any other zones that are close by. So, what I anticipate happening here is you could already see the rejection off this pivot. So price came down right here, rejected off the resistance, came down, rejected off the pivot right here, and then it continued down a little farther. So it's still got some ways to go. I mean, it can come down to even the last pivot down here before, it corrects back up. Or it could even come down to the support. There's really no way to really tell, how far it'll go. But, looking on other time frames, here, let's see. So we're on the 4 hour right now. We could even look at the overall technicals for Euro NZD. So if we go to Euro NZD here, the overall technicals right here show a strong buy. So it's a strong buy on the daily. It's neutral on the 4 hour, and that's because of the retracement. And then obviously, it's going to be, it's pretty mixed. So right here on the very short time frames, it's a super strong buy. The 5 minute, it's a buy. The 15 minute, it's a sell. The 1 hour, it's a sell. And that's because on the lower time frames, it's just indecisive right now because of the retracement that we're going through. So, obviously this is a strong retracement. It's not anything to not look at, because you can see right here, it's retraced about 165 pips. So, that's a pretty big move down. But, that retracement's either going to reject off one of the pivots, like I mentioned here, and then shoot back up, or it might come down to the support and then shoot back up from down there. I still have a buy bias for it. But like I mentioned earlier, we're entering NFP, which is tomorrow morning. So, once we enter London, there's going to be pre-NFP move. It's either going to move really slow or it's going to move really fast before it, has some crazy spikes. So you know, me personally, I would just stay away from Euro NZD right now. You could take the sell. Well, I mean, if you did take the sell right here, like if you weren't looking at the trend for the day, I mean, obviously this would be a nice short right here. And that's probably how far it's going to go. It's probably going to go, you know, you turn on the pivots if you're just ignoring the trend. And it might as well go that far. Like it already went this far. It could go this far, or it could go all the way down here. Before shooting back up to the, you know, correct to the overall trend. But me personally, you guys know how we trade at K2. You know, we trade with the trend, and we trade with momentum. So although we have momentum swinging down, if you guys are familiar with the K2 indicator, you know, we still wouldn't go against the trend, because, you know, last thing you want to do is you want to enter a sell, and then it just ends up reversing on you super hard. You know, we don't go against our rules. So for the most part, this is why I didn't call this trade. You know, this was a valid trade, but I just didn't call it. But I still see it as a buy bias until it closes below, like it did right here. So, you know, if you guys are familiar with the pivots, obviously when price is below the pivots are angling in that same direction, the pivots are spread out, then it's in a downtrend. In the opposite, if price is above the pivots are angling upwards and they're spread out, it's in an uptrend. So as you can see right here, you know, the pivots are slightly coming down. But if price shoots back up, it's going to split up like it did right here. So pretty much right here, price was trending up, price came down, same situation right here. Like you can see it's a sharp drop, but then it rejects right off this support right here and then skyrockets back up. That's basically what I see happening right here, because the trend up is it's just a little too strong. So if you go on the higher time frames, this is the 4 hour, if you go on the 8 hour, it's still trending up. Same situation. The daily, same thing right here. So like I was mentioning before, how it would reject off the pivot, that's kind of what's happening here. So on the daily, it looks like it might reject off this point right here if it comes to test this pivot. So if we look at the 4 hour, yeah, so that's kind of lining up with the last pivot down here. Like I mentioned before, it might come down to the last pivot, which is right here. And then once it reaches that point, it might end up shooting upwards like it could right here. And that's why I wouldn't take, you know, a position in the opposite direction, because I don't like to trade against the trend. So me personally, I would just stay away from Euro NZD. If you do get a buy signal, let's see who has that. Yeah, Poulain. I think, I don't know if Poulain has it, if you have the indicators, but if you have the indicators, if you get a buy signal, then I would take the buy, because it'd be the same setup right here, using the pivots, you know, the K2 pivot strategy. And if you guys aren't familiar with the K2 pivot strategy, I'll show you really quick how it works. And I'll just put this right here. I just rewinded time to this specific candle, because that would be the entry for it. And I'll just give you a quick breakdown, because it's not too difficult. So this is the K2 pivot strategy. For one, you want to identify the trend using the K2 pivots. Next, identify a retracement. Third, identify a rejection off K2 pivot zones. Lastly, identify a valid K2 signal. And after that, you can enter on the open of the following candle. So, I mean, the strategy is super simple and very self-explanatory. So first, you want to identify the trend. This is probably the most difficult part for most people. So to identify the trend, you're going to look at the K2 pivots. You're going to make sure that price is above the pivots and the pivots are angling in the same direction and they're spread out like they are right here. So this is going to confirm an uptrend. Like I mentioned before, same situation, but opposite direction. Price is below the pivots are angling down and they're spread out. That's a downtrend. So right here, it's clearly in an uptrend. Next, you want to identify retracement. So you can see price came up right here. It established a high in this area, retraced down to this point right here. So as it retraced down, third, we're going to look for a rejection off the K2 pivot zones. For the K2 pivot zones, basically, there can be a rejection anywhere within the zones. So these are the zones right here, these 4 pivots. And you can see right here, there was a rejection right off this level 2 pivot. Once the 3 requirements are met, you're going to identify a valid K2 signal. A valid K2 signal would be a buy signal with a green bullish candle, or a red sell signal with a red bearish candle. This would be an example of an invalid signal. This is invalid because it's a buy signal, but with a red bearish candle. So in order for it to be valid, it has to be green and green or red and red. So right here, it's green and green. So that fulfills the fourth requirement. And then looking back at all the requirements, we've identified the trend, we've identified a retracement, we've identified a rejection, and then we've identified a valid K2 signal right here. So once those requirements are met, you can enter on the open of the following candle. Right here, we'll enter a long position. So generally, I'll zoom out, set the parameters right there. It's kind of far. It's like 200 and so yeah, what I generally do is I'll put the stop loss at the previous swing right here. So 122. And then I think that's about it. Yeah. So all the requirements are met. You let the trade run. And there you go. Full TP. You would have hit 122 pips off that trade. So pretty much for this trade, same situation. I would wait for a buy signal, like a buy momentum signal. And then once you get a buy momentum signal, then you can enter, same situation right here for the same entry. So yeah, that's pretty much how to analyze your NZD for now. But like I mentioned, it is NFP tomorrow, so I probably would just stop trading at this point. We also have news coming up at 6:30, so in about an hour. We have high impact AUD news, and this normally affects the market pretty heavily. So I'm probably done for the week, because even once this happens, we have news early tomorrow morning for NFP. And if we call any trades, late night, that's going to put us at risk of, holding some trades into NFP, which, we don't want to do, because we don't want to get caught in any market manipulation, which, will obviously happen. But yeah, that's Euro NZD right there. Okay, so Mayank's asking, how do I draw the zones? Yeah, so pretty much, Mayank, you have the indicators, right? I'm pretty sure you do. So let me load the another chart right here. So let's go to the testing chart, and then I'll go to a clean chart here so I can show you exactly how I draw the zones. All right, so pretty much, let's go to a pair that I haven't drawn the zones for yet. Look for like a smooth pair. I was just on okay, so US 30. So US 30, I don't have zones drawn on here. So basically what I do is I'll open up the K2SR V2 indicator. So it's, obviously, this is what the chart looks without the indicators. And then I'll open up the K2SR V2 indicator. So I'll open that up. And then what I'll do is I'll just draw rectangles around the K2SR zones, because these zones are areas where price generally rejects from, or has rejected from in the past. So I'll just draw this right here. And then I'll draw this right here. And you don't have to, generally, if the zones are too close to each other, like down here, I would just draw this as one big zone so that you don't trade within those areas, because obviously, I'll show you right now how it looks once you have everything drawn up. So once you have everything drawn up, and then now I can take off. So you can see it looks a little messy right here, but once I take off the, actually I can move this down here. There we go. Just to cover the zone. So basically, if the zones are too close to each other, like down here, I'll just put them into one big zone. But obviously, if they're spread out like they are right here, I'll just create those as their own zone as well. So once we have that drawn up, you can see right here, it's a little messy, but once you take off the K2SRs, it looks way cleaner. So you can see there, and then you can see exactly where price rejects from. So you can see that price generally moves from zone to zone. So price kind of goes up, comes down, comes up, tests the zone, rejects down here, tests the zone, breaks it, consolidates a little bit, breaks it again, comes up, and then price pretty much goes from zone to zone. So it breaks this zone, comes up here, rejects off this zone, goes down here, rejects off this zone, rejects off here, and then, so on. And this allows you to pick trade. So basically, if you tie this with the momentum indicator, you trade within the zone. So pretty much once you get a signal, or you see this is how the K2 zone trading strategy works. So I'll show you how this strategy works as well. It's real simple too, so I can go over it really quick. So this is going to be the K2 SR zone trading strategy. which is also covered in the course. So if you guys have access to the K2 course, I'll show you real quick. So if you guys have access to the K2 course where I teach all the K2 strategies, they're all taught right here. So, you know, the official intraday strategies right here, the momentum strategy, the scalping strategies, all the indicators explained, the K2 SR zone trading strategy, which is what I'm going over right now, and the pivot strategy that I just explained earlier. So if you guys have access to the course, everything's taught here. So if you want to learn how to trade exactly how I do, and use, you know, the K2 indicators, they're all available to you guys. But let's go back here. So the first requirement of the K2 zone trading strategy is to identify direction. Forgot to turn my ring camera on. All right, so identify direction of momentum. And you'll use that by looking at the K2 indicator. Second, identify a break and close from K2 SR zone. And like I mentioned earlier, these are the K2 SR zones that we've drawn. And that's pretty much it. The last requirement is to enter on open of following candle, which is the same requirement as, you know, every other K2 strategy. So yeah, basically right here, you can see. So first we're going to identify the direction of momentum. In order to do that, you're going to look at these vertical lines. Like I mentioned earlier, when you have a red signal and it's a red candle, then that would be a valid sell signal. If you have a green candle and a green signal, that's going to be a valid buy signal. So this is a valid buy, a valid sell, and valid buy. But this strategy works a little differently on US 30, so it's going to be a little harder because US 30 moves a lot different than the normal Forex pairs. Because you can see here, like if you count this, like right here, measuring tool, okay. So right here, if you count this right here, this is like 1,000 pips compared to, you know, normal Forex. So if you count these right here, they move a little differently. So this strategy is kind of harder to explain on US 30, but I'm just going to show you an example of how it works. So right here, you're going to identify the direction of momentum. So right here, we have a valid buy signal. And then next, you want to identify a breaking close from a K2 SR zone. So requirement one's been met because we've identified a bullish momentum right here. Next, we want to identify a breaking close from a K2 SR zone. A breaking close from a K2 SR zone is basically going to be when price breaks the zone, outside of the zone, and closes. So as you can see right here, price came down, consolidated a little bit, came down right here, and then it came back up right here. It broke above the zone, and then it closed outside of the zone. So for one, we've identified the direction of momentum right here. And for two, we've identified a break and close from a K2 SR zone. So in this situation right here, or even this situation right here, so this is going to be one entry. So identify the direction of momentum. Right here, we know there's a sell momentum here because it's a valid sell signal. After this, you want to confirm that it breaks and closes outside of a K2 SR zone. So right here, price came down, it consolidated right here for a bit, and then it broke below here. So if you were to take this position right here, you can enter a sell because you can enter on the open of the falling candle. Since we have all, like the only two requirements met right here, you can enter a sell. And generally, like I mentioned, price generally moves from zone to zone. So you're going to want to exit before price gets to this zone right here, right? Because, you know, what happens here is, or what might happen here is price is going to reject off it, which exactly happened here. So you can see price rejected off this zone, price came up to this zone, and then rejected. And then same situation here. It came down to this zone, went sideways a little bit, then broke it, then came down, tested this zone, went sideways, rejected off here. And it's pretty much just moving from zone to zone. So if you're going to enter using a strategy, you basically want to enter where price is in like a free range, basically like within a zone, and then ride that wave to the next zone and then exit before it reaches that point. So right here, if we enter this trade, we'd exit right here. We, you know, obviously have stop loss at the previous swing, which would be somewhere over here. And this is about 1,000 pips, so halfway through. So if you guys are familiar with how we set our stop loss TP, generally our stop loss TP will be 1-to-1 risk to reward ratio. So this would be the trade right here. And then generally our TP would be at halfway mark. So half TP, full TP would be 1,000. So that's 2,000 pips. but TP1 would be right there. So I'll just mark it with the horizontal line. Make it a different color. It's kind of hard to see. Let's mark it blue. And then if you guys are familiar with the exit strategy, then you guys would know that once price reaches TP1, we move our stop loss to that point. But our TP1 would probably be below the zone. I mean, above the zone, because like I mentioned, you kind of want to get out before it reaches that point. So right here, price came down. We probably would exit at this point right here. And then we would have waited for the next entry. So back to the original entry I was talking about. Here's the second entry right here. Because we have identified the direction of momentum, since we have a valid buy signal right here, we've identified a breaking close from a K2SR zone because this specific candle broke the zone right here and then it closed above it. So once you've identified that, you can enter on the close of that candle. And then like I mentioned earlier, the swing would be right here at about 3,000 pips. And then TP would be same distance away. And as you can see right there, it hit TP. So this would be the zone trading strategy. I'll go over this with a normal Forex pair later. It doesn't, I mean, it does work with US30, but US30 moves a little differently. It doesn't really range. It kind of moves directional. So it's kind of harder to trade this because it, although it does move from zone to zone, it doesn't move as smoothly as other pairs. So if I pull up another pair real quick, so like odd USD, you can see here, it's way smoother. Like right here, it tests the zone, rejected off it, and then it pretty much tests the zone, test the zone. It goes literally from zone to zone compared to US30. So you kind of have to understand, which assets you're trading, because Forex is generally a ranging asset. Like it'll go up, it'll come down, it'll go back and forth. But US30 is totally different. As you can see, US30, if you zoom out of it and then you look on like a higher time frame, it moves directional. It either moves down for a good amount of time, or it moves up for a good amount of time. It doesn't really bounce back and forth like normal Forex pairs. So, that's a basic explanation of the strategy. And Mayank, so this is pretty much how I draw my zones. It's real simple. And all I do is I turn on the K2SR indicator, and then I pretty much just draw my zones over it, and then I'll hide the SR indicator so it's a cleaner view. And yeah, it's pretty much simple because the SR indicator does pretty much all the work for you. So you don't have to go and, it takes all the guesswork out of identifying where the zones are because they identify the zones for you. But yeah, so there goes that question. And then now I'm going to keep going down the list. So next question is from Keith. Keith's asking about, he said, did you call AJ? No, I didn't call any AJ trades today. Let me see if I can pull it up. So there was an entry right here this morning, but it was at 2 a.m. so I was asleep. That's why I didn't call it. But this would have been the entry if I was to call it. I don't really see any other entry here unless you see something else, Keith. It would be right here. So basically, this is the same strategy that I just discussed earlier. Let me see if I still have the, I think I deleted it. It's all right. Yeah, so looking at AJ over here. Go back. Yeah, for this entry over here, this would have been the same strategy that I discussed earlier, the zone trading strategy. Basically, we have identified the direction of momentum because there's a buy signal right here. We saw price come down within this zone right here. It closed within the zone, this red candle, and then it broke above it. So once it broke and closed above it, that provided for a valid entry applying that strategy. So this technically, if you caught this entry, for those of you that apply the strategy yourself, you would have caught this trade, which, obviously it's a great trade. I kind of wish I took it. So let's see, you've been profit about 50 pips. It would be an entry for the zone trading strategy, and then it also would be an entry for the pivot strategy. So if you guys, well, yeah, most of you guys are familiar with it. That's the same strategy I just went over earlier. So basically, the pivot strategy is you identify the trend, it's trending up, identify a retracement. So price came up, price came down right here. and then a rejection. So there's a rejection off this point right here, and then it came up. The fourth requirement would be the K2 signal right here. So once you got the signal, you could have entered a buy right there, and then it would have hit TP, it looks like, for about 43 pips. So, you know, depending on which strategy you're applying, they're all pretty much the same because they're all based on trend and momentum. The only difference is the point of entry. But it's pretty close. It looks like, you know, so this entry was right here. If you took the zone strategy, it'd be up here. So you just be a few pips off. So let's see from this point right here where the entry for the pivots, it is only off about 7 pips. So regardless of which strategy you applied, you could have gotten in at either point. So it's a good entry. Let's see. I'm gonna keep going down the list. Keith's asking about CAD-JPY. So let me look at CAD-JPY real quick. All right, so CAD-JPY, it's within this big zone right here. So what I think I did is I bunched up the zones because they were super close. So yeah, as you can see right here, the zones are pretty much bunched up because, I mean, they're not spread out far enough. Like right here from this zone is this zone, it's only 19 pips. It's not enough for someone to get into this trade and get out, you know, with decent profit because the spread's about 3-4 pips, or for other people, it'd probably be 5 pips. So 3 to 5 pips. And then you'd have to pay that spread both ways, entering the trade and exiting. So if you were going to do that, you'd only lock in like 4 pips if you were to trade within this small zone. And that's why I usually try to avoid trades like that. And the reason for that is because, like I mentioned before, price goes from, it pretty much goes from zone to zone. So price came up here, rejected, came down, and then as you can see right here, it's rejecting off this zone. So it's not really worth the trade unless, you know, you really want to take that risk. It's not a safe area to trade right here because pretty much no matter how far it goes, it might come down right there and then it would shoot back up because the trend is trending up right here. Or it could come down here and then shoot up from there. So it's basically like a guessing game whether it'll keep pushing down, like if it'll keep pushing down to the lower end of the zone and then break through it, or if it'll reject off it at any of these points, like reject off one of the pivots or reject off the lower zone. You know, it's really hard to determine the actual direction when it's within a zone. So it's not something I trade because it's too risky. And I'm sure, you know, a lot of you guys here that have been here for a while, you know, I don't really take risky trades. I only take trades if I'm completely positive that it'll hit. And, you know, that's why our win percentage at K2 is super high because I don't take risky trades. I take trades that I'm, you know, at least 80 to 100% sure that it's going to be a winner. But I mean, if you guys have access to the indicators, you guys are more than welcome to take this trade because technically this would be a zone entry because price came above this zone right here, then it closed below, and then we got a sell signal. So you could have taken this trade if you really wanted to, but me personally, obviously I wouldn't take it because it's too risky. There's too many zones within this area. And generally you don't want to trade where zones are because, you know, it's just a breeding ground for rejection. Price could reject off any of these zones right here, and it's just not worth the risk. I mean, especially once you start trading a bigger account, you're more focused on eliminating your risk. Like you don't have to shoot for the big profits because if you're trading a big account, you know, those smaller profits, the couple $100 you make from TP1, TP2, those will add up. And then if you don't have any losses, then, you know, you're good to go. But yeah, so Keith, I don't see anything for CAD-JPY right now. It's not something I would take due to all the zones right here. There's just too many areas of rejection. So if this rejects here, it can go back right here and reject off this point or reject off this point. It's pretty much just going to bounce within this zone right here until it breaks out of it. So if we do get a buy signal, then yeah, I'd catch this ride over here because I can take this ride for like 40 pips and then I'll get out before it reaches this zone. Or if it breaks below here, I can take a little scalp right here and catch like 10, 20 pips or whatever. But yeah, me personally, I wouldn't take that trade. Let's see. All right, next question by Puvin. Puvin's asking, hey everyone, can we look at EG? So let's pull up EG real quick. I'll just leave the zones on just in case. They're all drawn up, right? You can see here, You know, pretty much like I did earlier, I drew these zones according to the SR. So I'll hide the SRs now, so clean it up. And then this was an entry from the 3rd. So on the 3rd, I wanted to call this trade. When was the 3rd? Oh, I think the 3rd was Sunday. Yeah, it was Sunday or Monday. So basically, I saw this entry using the zone trading strategy. So if you take off the pivots, it was like I mentioned before, you know, first requirement, identify the direction of the momentum by looking at the first valid K2 signal. So right here, we have a valid buy signal. The next requirement was to confirm that price broke and closed outside of the zone. So right here, price went into the zone, it broke the zone right here, and then it closed. So this would be a valid buy entry right here. The reason why I didn't call it, so I'll just rewind it to that specific point. The reason why I didn't call this trade on that day was because price was trending down. And like I mentioned earlier, I don't like to trade against the trend. So you can see right here, price was below the pivots. So obviously I'm not going to take this trade because I'm worried that price will reject off the pivot and come back down to correct to the overall trend. You know, I probably should, I mean, like I mentioned, I don't take risky trades, but if I was going to take a risky trade, this would be a good entry because we generally don't use the pivots for the zone trading strategy because like I mentioned, the zone trading strategy is basically used to identify, you know, rejections from the zone. So price came from this zone to this zone to this zone and then back up, and it just bounces from zone to zone. So you technically you don't really have to follow, you know, the trend, but you know, me as a trader, I like to be very careful. So that's why I didn't take this trade. But if you did take this trade, it looks like it would have hit at least TP1. But you know, back to like what I mentioned earlier, like how I said price moves from zone to zone. Right here, price rejected off this zone and went straight to this zone right here. Clean rejection. And then what happens there? It comes straight back down. Check that out. See back there? Came down, and then what happens again? Rejects off the zone. So odds are it's probably going to come up and retest the zone right here. So, you know, if you have access to the indicators and the strategies, and you apply the specific strategy, you would have at least hit TP1 because TP1 would be about 21 pips. You know, half 42 pips right here. So TP1 would have been, you know, somewhere around here. So once price reached this area, you could have exited and moved your stop loss and profit. But yeah, I mean, me personally, I just wouldn't take this trade right now either because it still has a sell momentum. So until you get a buy signal, it's not going to be valid for another entry. And the thing with EG is that it just moves really slow. So you can see right here, this zone here is not even that big. So even after I took this, if I was to take this entry, it only gave me enough leeway for about 30 pips before it reached the upper zone. And that's why I would have just avoided it because it's just too risky for someone like me because I don't like to take, you know, trades that are too risky. But that's EG for you right now. There's just no there's no entry that I would take because like I mentioned, it's a sell signal here. So odds are price is probably going to come back down. Plus looking at the pivots right here, price is still trending down. So what might happen here is we might get a nice rejection off this pivot and it might come straight down. Or it might come up and test the zone before it comes straight down again. So I'd probably keep away from that, you know, for now until there's some sort of confirmation or some sort of catalyst to enter the trade. But it is NFP tomorrow, so this is just way too risky to take right now. All right, so let's see what else we got here. All right, Keith is asking about Euro odd. So let's see. Euro odd. So the reason why I didn't trade Euro odds because it's just really why I think we took the sell right here, or no, this was on the 3rd. Yeah, I don't think we took a sell here, but I mean this would have been a good sell. I can't remember if we took this or not. We might have not. I just can't remember. Actually, I think we did. So let me go to when's the last time we took Euro odd? Um, this is on the 3rd. Actually, no, we didn't take this trade. Or did we? No, I don't think we took that trade. That was just a trade idea. So we didn't take this trade, but this would have been a valid entry. The reason why I didn't call this was, like I mentioned, for EG, price was trending up, and I don't like trading against the trend, so that's why I didn't take it. But it would have been a good trade right here. Obviously, it would have, TP would have been up here. This would have hit TP1 because TP1 halfway would have been somewhere around here. So there's a lot of leeway here. So actually, if whoever took this trade, if they did, it gave a ton of space here for you to get out of this trade if you did take that trade. But just looking at it right now, it looks like it's shifting in trend. So it looks like it's coming down. So yeah, right here we do have a sell signal. So if price closes below the zone right here, it would provide for an entry. The only problem is that it's too close to this other zone right here. It's only about 19 pips. Generally, I like to give it about a 25 pip leeway, especially because the spread's like 4.5. So, in and out of the trade, going into it, you have to cover the spread, which is going to be 4.5. So you'll go in for a loss. And then when you get out, you're going to have to cover that spread as well. So it's too risky for myself to want to enter this trade, because you're going to have to give away about 10 pips before you make any profit. And then on top of that, you still have to get out of the trade before it gets to the zone. Because like I mentioned before, price usually comes to the zone. And then if it comes to the zone, it's probably going to reject off it, or it might come to the next zone and reject off it, or it might come to the next zone and reject off it. But there's just not enough space for you to get in and out of this trade within this zoned area right here. Maybe if it closed below here, because down here there's a lot more space. So if it closed down this point, then you'd have like 50 pips to get out of this trade. You could literally write it like 30 to 50 pips, or 30 to 45 pips, and then get out to cover the spread before it rejects off this point. So if it comes down here, then yeah, that's cool. But if you come in from this point, it's way too risky. Plus it's NFP tomorrow, like I mentioned. It's super risky. It just adds like more risk on top of risk if you decide to trade from now until tomorrow. I personally would just recommend that nobody trades from now until tomorrow, or just call it a week, because we've locked in a lot of profits, guys. There's really no need to trade for the rest of the week. Like I don't think we've had any losses this week. So if you take another trade, you're just putting on risk, like unnecessary risk, because like there's no need to force any trades right now. But yeah, I mean, if we do get a sell signal, I wouldn't take it because it's not enough. Yeah, I see Keith said starting to give a sell signal. So this candle is probably going to close in the next 14 minutes. But even if it does, it would have to be a big candle. Like it'd have to close way down here for me to take it, because this point right here is only about 19 pips. It's not enough space for you to get in and out. And then this down here, same difference, like 20 pips. Unless you're scalping it. I mean, you could scalp it, but if you scalp it, you're still taking on a ton of risk. So me personally, I wouldn't take it. Let's see. All right, Keith wants us to look at Euro NZD. I think we looked at that already. Yeah, so for Euro NZD, this is what we discussed earlier. So this would be a valid sell if you were applying the zone strategy. But like I mentioned, I don't like to trade against the trend, so I wouldn't take this, just due to the fact that it's going in such a strong trend up. What I would wait for is I'd wait for a buy signal, and then I wait for it to close, somewhere above here, and then take that buy. Otherwise it's just too risky. Because what could happen here is if you took a sell here, well, if you did take the sell here, you'd probably be exiting at some point right here halfway. So if you took a sell here, your TP1 would be somewhere around here. Or maybe it already triggered, I don't know, one of those. It'd be somewhere in the area. So this would be a really tricky trade to take if you're taking it against the trend, because it might reject off this pivot. Or, it might even come all the way down here and reject off. But odds are it looks like it might reject off this pivot, because if you look on the higher time frames, like the 8 hour, it's still Well, the pivot would be a little farther down here. And then on the daily, it actually, let's see. Yeah, same difference. So on the daily, the pivot would be right here. So that'd probably be the farthest that it goes before it like would most likely reject from. So if you go on the 4 hour, yeah, it's pretty much lining up with the last pivot. So me personally, I wouldn't take it because it's just too risky. And it's against the trend that's just way too strong. So that's Euro NZD. Let me see what else we got here. All right, let's go on to the next one. All right, cool. So we got Keith wants to look at GA. So I had GA marked up earlier. I think I talked about this earlier too, but I'll just go over it again. So pretty much right here would have been a valid sell entry for the zone strategy. But I think so if I pull up the zones, the reason why I counted this as a zone entry is because the zone actually ended up here. So technically the zone was right here. So it would have broken a zone and then I would have wrote it to this next zone. But I just drew a big zone because I just don't like trading when there's not enough space. So even if I was to take this trade right here, movement from this zone into this zone is only about 50 pips. So technically it could have been a good trade, but you know, I like to put my stop loss at the previous swing. So if my stop loss was at the previous swing, this would have been like way too close for me to trade, and that's why I didn't take it. Also because the trend was still up. The thing with this signal was that, so if I just delete this stuff, the thing with this signal right here is that it lined up perfectly with the pivot right here. So that's an issue because if it lines up with the pivot, that gives like a double confirmation that price is possibly going to reject off this point, because it came down to the zone. So there's one confirmation that it's probably going to reject, and then it came down to the pivot. That's two confirmation that it's going to reject. And on top of that, it rejected right off it touched the exact zone right here. So if I take off these the zones that I drew, you can see that the K2SR zone right here, it rejected directly off that zone. So it's just too risky. That's why I didn't take it. But it looks like it's coming down either to this point, and then if it'll either correct back up or it'll break back down and try to break through this zone. And it's just too indecisive. You know, I like to take trades that I know are going to win or most likely going to win, and this could literally go either way. So that's why this is something that I personally wouldn't take, just because it's just too risky. Because the last thing you want to do is get into a sell, and then it rejects right off here. Or the last thing you want to do is enter a buy, and then it breaks farther below. So it's just too risky to take right now. It's not something I would personally take. So I would probably just avoid this trade. Oh yeah, also because there's Australian news coming in about 30 minutes as well. I keep forgetting about that. So there's news at yeah, you know, I'm gonna send this to the group actually. Forgot to remind you guys. So let's see. I don't have time to type something up, so I'll just I'll just copy what I said last time. Let's see. So let's put that there. High back AUD news in about 30 minutes. Wait, is it 30 minutes? Yeah, in about an hour. Okay, cool. So in about, oh fuck, it is 30 minutes. Whoops, 30 minutes. copy the whole thing. All right, cool. And I'll just send this to the public group just so everyone knows. I know a lot of people forget to check the news, or people just don't pay attention to it. But it's good to know, just for everyone to be aware that there's high impact news coming. And the thing with AUD news is that it generally affects the market pretty heavily. It's really hard to tell if it's going to spike the market or not. But more times than not, the AUD news usually affects the market pretty heavy compared to. I mean, it's kind of similar to like U.S. news or European GBP news during those time zones. So, Aaron said he's back. Let's see. All right, so let's keep going. Keith wants us to look at GC. So let's see, GC. Me personally, I think it's going to continue up. So let's see where the zones are. So there's actually no zones within this area. The zones from a higher time frame. So when I can't find, let's see, hey Meg. So I forgot to explain this earlier. So in the situation where the zones are way down here because price is in a new area where it hasn't tested before for that specific time frame. What I do is I go on the higher time frames, like 8 hour. There's nothing there, right? I go on the daily, and then there's something there. So in that situation, I'll go and draw a zone over here, because generally the most important zones are just going to be the upper and lower zone for where price currently is, because those are going to be areas where you want to be aware that price might be rejecting from. So if you're taking a buy, you're going to want to know where price might go opposite from. Or if you're taking a sell, vice versa, you want to know where price is going to be rejecting from on the downside. So going back to the 4 hour for GCAD right here, Keith, even though it's within a zone right now, like I mentioned, price generally goes from zone to zone. So what's gonna happen here is price is probably going to go to this upper zone over here. And then once it reaches this point, it's either going to break the zone and test the next zone, or it's going to reject off this zone and come back down or shoot back up to test this zone. So you can kind of forecast where you think price is going to be going. But you can see right here, price it can consolidate. So right here, price broke below it and it consolidated sideways before breaking below. So it could literally go in either way. But if in this situation, if you wanted to scalp this or take this trade in directional wise, just because it's in an overall uptrend, I would take a buy opposed to taking any sells. But this would have been a good entry right here for a pivot entry. I think this is the same entry we took today, not today, but this week, where we hit TP right there. So if I pull up the see, I'll go to the premium GBP CAD. So yeah, this is the call from earlier. Same thing right here. So we entered off that. That was a pivot entry slash zone entry. So it was right here. We entered right here, and then our TP hit right here for about 86 pips, which is like a perfect entry. Because you can see right here, it literally hit our TP and then came back down, like perfectly. So yeah, if you were looking to enter this trade, obviously a buy would be the bias here. But it's just like I mentioned, there's news coming up plus NFP tomorrow. So it's not something that, like me personally, I'm just gonna sit out the market for the rest of the week because we made a ton of proprietary this week. Like I'll try to add up the results later today, but I mean, just looking at our results for this week, it's crazy because we had no losses. So like a couple hundred today. The US 30 hit like I think 3 times this week. So that's like, what is that? 1,500 times 3. That's 4,500 just US 30 if you're trading a normal standard lot. I mean, not standard lot, but a mini lot. And then yeah, pretty much everything hit. Like literally, your CAD hit. I'll just type in full TP. We'll see what has hit full TP this week. So for this week, we've hit 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we hit 8 full TPs just this week from Tuesday, Wednesday until today, Thursday. So that's crazy. CT said how many official US 30s hit. So official US 30 hit today for 1,500 pips, and then on Tuesday 1,500 pips. I think the one yesterday was Wednesday. I think yesterday it hit TP2, but the full US 30 TPs it hit on Tuesday, and then today. I think Monday there was news or something. There was something going on Monday where we didn't even call the US 30, but yeah, I think we're 2 for 2 for official, or maybe 2 for 3 if yesterday was official. I can't remember if it was or not, but I mean that's pretty good. You know, it looks like the market's moving back to normal, and you know we're hitting nonstop TPs. Like if you add all these full TPs for the week, let me see if the calculator erases it. Oh, perfect. So the calculator doesn't erase it, so we can literally just add this stuff up right here. So 86 plus 92 plus 55 plus 85 plus 76 plus 65. And these are only full TPs. These aren't even counting the TP1s, TP2s that we had. And we had a lot of those actually. So basically, these are the pips for full TPs, just full TPs. And then you multiply that by, if you're trading standard lot, to $10 per pip. This week, you'd have made 4,590 just from full TPs. You know, if you add up the TP1s, TP2s, probably add on another two or 4,000 depending on you know what we hit for that. But that's pretty good. I mean, if you just this is like if you just took the trades and let them run, and didn't even move him. Like you literally just entered the trades that I called and then let them run a full TP, because we haven't hit stop loss this week. So literally no trades are in negative. They should all be full TP or still active. So that's just for the full ones that have hit already. And then we still have 1, 2, 3, 4, 5 more trades still going. So actually, if those hit, this is probably going to be like 10,000 for the week. That's crazy. It's a lot of pips. And I feel like I should have taken these trades on my FTMO. Man, I was being too careful because the past month was so slow, and then the past 2-3 weeks have just been crazy. Like literally, we hit every single trade. So yeah, I mean, hopefully the trade the market continues this way because, or you know, hopefully the volatility stays high because all of our trades are based off momentum. So if there's momentum in the market, we're going to continue winning. And if there's not, we're just going to sit out the market like we did last week. I mean, last month. But yeah, so let's keep going through the questions. So yeah, I went over GCAD for Key. Mayang said, why do we not trade commodities in K2? So people do trade commodities, but I just don't. You know, I trade like, it's like that one saying goes like, you know, it's better to be really good at one thing than to be the master at none. Because there's a lot of traders that try to trade everything. They trade Forex, they trade stocks, they trade options, they trade indexes, commodities, and they suck at everything. So like I know what I'm good at. I'm good at Forex and I'm good at US 30. So that's why I trade those two. But if you focus on one specific thing and you get good at it, then you know it would make no sense for you to trade anything else. Like a lot of people ask why I don't trade S&P, why I don't trade NASDAQ, because I'm good at US 30. And you know that's the most volatile index, and it's the most profitable one if you're good at trading it. And that's why I focus on US 30. But if you look in the group, you know, there's a lot of people that trade commodities. It's just, I don't trade commodities. It's not that the strategies don't work on them. It's just that me personally, I just don't trade them. So like, look at gold right here. So if you're trading the K2 strategies on gold, you could have taken this entry right here for the pivot entry. And you could have locked in 6,000 pips right there. You could have taken this one right here, locked in another 6,000 pips, take this one right here. I mean, you could literally take all of these trades and they would have all won. It doesn't mean that, you know, just because I don't trade commodities doesn't mean that, you know, people don't trade them. Just me personally, because I just don't, I used to trade gold before, but I don't trade it anymore because, you know, US 30 is just more profitable. There's just no reason for me to go back to any of these other pairs, like right here. Like literally you can take every single trade here and these are all wins. Like 3,000 pips, 5,000 pips. It's all preference really. It's so that's gold. If you want to trade silver, it's the same thing. Another win there, another win there. If you want to trade whatever other index, S&P, another win there. I mean, the K2 strategies and indicators work on literally everything. There's no one thing that you need to focus on. You know, you just find what you like to trade and then master it. That's really what it really is. What else? Oil. So right here, I mean, this wouldn't be an entry, but so this would have been an entry here. Oops. Oil's kind of messy though. I personally wouldn't trade oil just because of, you know, what happened late, not lately, but that last time when it went to zero. But yeah, so like right here, this is when I was like, I'm gonna stay away from oil. And the reason why I don't trade oil now is because it just isn't as volatile as it used to be. Like over here, you could literally just sell oil and you can make money doing nothing. Like you just literally sell it and then, you know, just make money off this. But yeah, the strategy works here too. So, you know, if you're using the pivot strategy, right there, sell for 1,100 pips, or I don't know how it's measured because I don't trade it. But you can see here that the strategy works right here. But then you can see right here that it just got a little messy. I mean, it still works, but it just got messy here. So if you took this trade right here, obviously it would have hit, but it would have taken a very long time before it did. So yeah, for 800 pips right here, it'd take 33 days. So I mean, it depends. If you want to trade oil, you can. The strategies still work on these other assets. It's just me personally. I don't trade them. Like I can't see myself holding this for like 33 days to hit full TP. You know, I like to trade intraday, and just this is just it just doesn't move like it used to. So if you count the pips over here, these would move like, you know, close to 800 to 1,000 pips a day. Over here, it moves like 78 pips a day. Like it's like literally impossible. Well, I mean, it's not impossible, but you'd have to take huge lot sizes to make any real money trading oil nowadays. I don't know where this spike came from. I don't know if there was news recently or whatever, but it looks like there's random spikes in price. But overall, it just moves a lot slower than it used to. So I don't trade oil. You know, if you want to trade cryptos, it works on cryptos too. It's really up to you how you want to apply the K2 strategies. But it's available for whatever asset you want to trade. So this would have been an entry right here. It'd still be a buy. This would be a valid pivot entry right here. It would have been a win, obviously, for like 3,000 pips or 300 pips, however you measure these. But I don't trade crypto, so it's just really up to you. You know, if you want to trade commodities or anything like that. But just me personally, you know, I focus on Forex and US 30 because I know that that's where I'm good at. So let's see, CT said, how long before NFP will you hold this damn AU? So let's see, let's pull up AU real quick. And, you know, I'm probably going to just close it once it reaches profit, CT, because personally, I don't like holding AU into London session. Like, London session always seems to be like a shitty time to hold odd pairs. So, like me personally, I probably wait until it gets back into profit. I'm probably just going to close it out because it's just not really worth the risk, you know? Like we've had so many good trades this week. Like I still think it's going to shoot up because the US dollar is super weak. So if we compare it with the index, DXY, I mean, it looks like it's coming up slightly, but I don't think it's going to continue up very high because the US dollar has just been super weak. And like the way that gold's moving, still moving up pretty strong. So I think it'll bounce up. I think if it bounces up, probably in the next 2 hours. Oh crap! You know we have EUD news. CT, I forgot. I just put that up earlier. So let's see what the projection. There's no projection. It's just a policy statement. More hawkish than expected is good for currency. Yeah, I don't know. That there's the EUD news coming in about 30 minutes, so we can check to see what happens. Hopefully pushes it like the TP, and then we can just get out. But yeah, I feel like their monetary policy would probably be better because they were like in closure, I think, last month, and then they reopened. So I think they should be good. I mean, obviously the last one wasn't good because they reclosed, but they might be shooting back up soon. So, and if that happens, it's just going to skyrocket it because the US dollar is so weak. So if AUD news is good at all, it's just going to shoot up like crazy. It's going to swing up and hit our full TP. Yeah, that'd be our best option right there if that happens. But yeah, I probably would try to get out sooner than later if possible. I mean, if not, I'm just gonna hang on to it. It's no big deal. Let's see. So banks done. Andrew's asking about S&P 500. So let's pull up S&P real quick. I mean, S&P is super bullish. Let me just delete these. S&P super bullish. Let's see where the next zone is. So there's no zones here on the 4-hour. Let's go on the 8-hour. There's no zone here, but the closest support is right there. Yeah, the next resistance is actually pretty far off. Let's go back to the 4-hour. So, yeah, I mean, it's got a long way to go until it hits the resistance, but it looks like it's retracing right here. So what might happen, you know, from my personal view of it, I probably see it coming down to test the pivot right here. So it might come down, test this pivot, and then shoot back up. I mean, it clearly has a buy bias. You can see it's a super strong uptrend. It's been trending up since March 22nd. It's literally just been pushing up. Or, I mean, it came down right here and it consolidated, came back down. So technically, this trend has been going up. I don't know if you'd consider it starting from here or from here. So if you go from way back here, this is on June 26th. That's like 2 months or a month and a half, I guess. And then it came up, consolidated, came up, consolidated, came up. It might go into consolidation actually. So if you take everything off, you know, just looking at how price moves from our bird's eye view, obviously it moves in waves. So just looking at it right here, parallel channel. So price came up, consolidated. Price came up, consolidated. Price came up, and then it just might go into consolidation again. I mean, who knows? Because we're going to NFP tomorrow. So actually, I don't think it's going to consolidate because if we go to NFP, price is going to either shoot up like crazy or shoot down like crazy. And you know, we don't trade news, so I mean, I wouldn't even take this trade. Let's see if I take out the pivots. Yeah, so you can see it moves in waves. So from June 28th to June, all right, yeah, June 28th to June 6th, July 6th, about I guess a week or two, it trended up, went sideways for 2 weeks, went up, went sideways for 2 weeks, went up. It's probably gonna go sideways after NFP. But I mean, who knows? It's not like personally, I don't like to trade indices during Asia session anyways because it's such a dead period. The problem with trading not just indices but any pair during Asia session is that it's gonna consolidate for like the next 2-3 hours, and then once London happens, it's gonna skyrocket somewhere like in a direction once volatility comes in. So it's just too risky for myself. What you know, I just wouldn't want to take it because I only like to trade when it's directional. So unless it's directional, then I would take it. So we have the pivots right here. See, like right here, I would take this trade because it would be a pivot entry. So basically what I would be waiting for here is I'd wait for a sell signal, like right here. I'd wait for a sell signal for retracement, wait for the rejection down here, and then wait for the buy signal in continuation to the trend, and then take it from there. It's not something that I would just, just hop in just because, and especially because of NFP tomorrow, it's just too risky. So let's see. All right, iPhone's asking for GJ, so let's pull up GJ real quick. GJ is actually, yeah, so it rejected off this K2SR level up here. It's still in an uptrend, so I mean this is kind of risky because the thing is this is this would be a double top, this and this, and then this would be a smaller double top, or I guess a triple top if you count all three. So the problem when you reach areas like this where it's an area where a lot of people are watching, the market makers will see where sentiment is, if there's more buyers or sellers. So let me see if I could pull up sentiment. Let's see, GBP, JPY, IG sentiment. Oh crap, I do that. All right, so let's go with this. All right, cool. So yeah, look, if you want to look up the sentiment of the market, I usually just Google the pair and then IG sentiment for the specific sentiment you're looking for, and then you just click on the IG website, and then it'll show you where more buyers and sellers are. So right here it's 55% long, and it's kind of too close because the sentiment's it's not on one side. So say if it was like 60% long, then I would anticipate the market makers to push price down because they want to stop everyone out that has their stop losses right here. So say if there's 60% of the traders who are long right now or like trying to buy, generally if they enter long here, a lot of people trade with like a 1-to-3 risk reward ratio. So if their risk is like that, they're going to spike price down right here and then stop them all out before shooting it up. And vice versa. If there's sentiment of a lot of sellers because a lot of people are identifying this as a double or triple top, they'll do the same thing in the opposite direction. So if there's more sellers, then obviously they'll have their stop loss right here at the previous swing, and then they'll either spike price up super high and then drop it, or continue it upwards. And that's why, like generally, I don't like to trade common things that people look for. Like a lot of people, like you don't want to trade where everybody's trading. Like if it's trending super heavy like this, then yeah, obviously you don't want to take a buy. But I generally don't like to trade where there's like double tops or head and shoulders or any of those type of patterns that a lot of traders look or retail traders look for, because you don't want to get caught in those fake outs. The last thing you want to do is enter a buy right here and you think you're like, okay, of course it's gonna be a buy because the trend up is so strong, and then they spike price just far enough to hit your stop loss. Because I'm sure you guys have experienced that where you've entered a trade and you're like, there's no way that this could go opposite, and what happens, it goes opposite to exactly your stop loss. So your trade, like if you enter a long right here, your stop loss will literally be like right there, and then it'll hit your stop loss, just tap it, and then it'll shoot up like crazy, and then you'll be so pissed. So this is why I don't like to trade where everyone else is trading, because the thing is, a lot of people trade support resistance. So like let me just yeah, so a lot of people here will like to trade support resistance. They'll like to trade off the rejections and stuff. And that's why I like to trade in the middle of the zone. So like down here, a lot of people aren't looking for trades down here. So that's why I just I'll take my sell right here, and then I'll exit somewhere over here. And the reason I do that is because what the normal retail trader is going to be doing? They're going to be like detecting this as a rejection. They're going to see this as a double bottom, and then they're going to put a buy right here. So the thing is, I wouldn't want to like risk going into a trade farther than this, because you don't want to get caught in these little fake outs. That's why I'll enter a trade in the middle right here, and I'll get out before it gets to any of these points. And then a lot of retail traders do the opposite. They like to trade at these specific points, like places where there's a lot of manipulation going on. You can see there's crazy manipulation right here. Price came down, rejected right here, came up here, rejected right here. And then I'm sure a lot of people get like screwed from here, because people enter trades just because it's a resistance or a support. And that's just the way that some people trade. But I found that this is more profitable to trade within the zones than to trade, where price is being manipulated within these support resistance areas. iPhone said that should be illegal. I know. I think everyone else agrees too, but the banks and institutions run the market. So, I mean, you're better off staying out of their way and trading, where they're not looking or trading, because you're just better off and you don't get caught in those like weird movements. But yeah, I think that's it for GJ. Let me see what else we got here. We have one more question from Amrit. He's asking about gold, or actually I went over gold already, Amrit. So is Amrit still here? Oh, Amrit's not even here anymore. But yo, Aaron, are you helping Amrit, or did he just like give up?
Shawn?
Yeah, what's up? What's up, Aaron?
So what were you saying?
Oh, were you helping out Amrit? He asked about gold and GU, but I think we went over those already.
Yeah, Amrit, don't start.
He's not even in here, bro. I think he left already. He got too tired of waiting.
I told Amrit about Fridays already. We don't do those.
Yeah. Well, I mean, you guys are gonna get on your own call anyway, so I mean, well, dude, Amrit asks about gold every every single day. Is that his favorite? It's his favorite pair. Let's see. Looking at gold. Yeah, I talked about gold before. Like the thing with gold is that it's overextended. So although it's in a super uptrend, I personally wouldn't take it, because price could come down. It was like I mentioned before, like the market makers are watching this. They're waiting for sentiment. They're waiting for a ton of people, like a bunch of suckers, to get in this trade, and then they'll spike it down, like right here. So in this situation right here, a lot of people, so if I rewind this to this point, a lot of people are like, oh crap, gold's never going to drop, right? So what happens, people enter a cold buy right here, and then they'll put their stop loss like right there or something, right? They'll put stop loss right there, and they're like, oh, there's no way I could lose because price is so strong, it's coming up. And then what happens? They get stopped out like crazy. And that's why I don't like trading things that a lot of people are trading, because it's just a breeding ground for manipulation. It just allows them, allows the institutions and whoever, the market makers, to basically move the market to their advantage, because they know there's a lot of people trading these assets that don't know what they're doing. They don't look at the psychology side of trading. So especially right here, same situation could happen. You kind of have to look at the trade from both sides. You have to look at it from the perspective of all the retail traders, and you also have to look at it from a perspective of the institutions and the market makers. They're not going to make it easy where you can just enter a buy and write it up further. They're probably going to spike it down a little bit like they did right here to stop everyone out, and then everyone's going to get all mad, and then they're going to shoot it back up. So yeah, if you guys are looking to take gold, me personally, I wouldn't trade it just for that specific reason, because it could spike down at any point, unless you have like a crazy stop loss. But even at then, so that's a problem, because the thing is, even if you have a big stop loss, they can still stop you out. Like they can literally dump gold like crazy. Like something crazy might happen in the news, like Trump might say something or whatever, and then the US dollar will gain strength, and then people will go back to the dollar, and then gold will just spike down, and then something will happen after, like some China deal or something happen, and they'll shoot it back up. So it's like, it's not something that I would want to trade right now specifically. Like I'd rather trade it when it was right here, like moving just normally, because you could just get in and out of these trades and you'll be fine. But when you enter when prices like this is super risky in my perspective. So Amrit also wanted us to check GU. Check GU real quick. And Amrit's not here, but I know he's gonna look at the replay. So So this is our GU from earlier. This was an entry for, it was an entry for the zone strategy, because, you know, like I mentioned before, you're going to identify the direction of momentum. Right here we have a buy signal and it's a valid buy, and then you want to confirm a break and close above a K2SR zone. So right here price came down, it was within the zone right here, it closed down here, and then it broke above it, and then it closed right here. So the two requirements were met, and then I entered this trade. Also on top of that, this is also an entry for a pivot entry, because you can see right here price is trending up. We got this retracement down here, nice rejection off the zone, the pivot zone and the SR zone, so that's a double confirmation. And then we got a buy signal right here. So either way, applying either strategy, you would have had an entry right here, and then it was a win for 92 pips. So, you know, Amber, if you're still trying to take this trade, I see it probably rejecting off this point right here and then shooting up to this upper limit zone, or it might break above it and continue on up if the US dollar is weak. So it just really depends, you know, how the market reacts. I mean, but it's also NFP, so me personally, I just wouldn't take it. But yeah, guys, looks like that's it for the questions. If you guys have any other questions, feel free to put them in the Q&A. Otherwise, I'll hang around. And if I see, well, I'm going to hang around anyways, because I'm going to wait for the news to happen at, was it 6:30? Yeah, I'm kind of curious to see what happens at 6:30. So I'll hang around for a few more minutes. If you guys have any other questions, feel free to put them in the Q&A, and then I can go over them. Otherwise, I'm going to hang around. I'll probably take a look at the charts. And then, yeah, hopefully our AU hits up. CT still here? No, CT left. Yeah, so me and CT are still in this trade right here. So I'm literally just waiting for it, hoping it shoots up. Otherwise, I mean, it's cool. No biggie. Yeah, Matt, no problem. Glad I could help. You know, Matt, you've been killing it lately. Just like everyone else. Man, it's crazy how many TPs we hit this week. Like literally.
No traces stop loss.
Yeah, bro, we had no stop loss this whole. Damn, like literally everything's straight TPs. It's crazy, man. You know, Aaron, I was posting on the IG, dude. We hit so many TPs, I ran out of gifts to put, like, because I always put the gifts in between each trade. Like we were literally hitting so many profit targets, I couldn't even put anything in between. I just ended up having to overlap the trades because we just couldn't stop. Like it just kept hitting win. It's nuts. iPhone said, I was told SPX, GJ, and US30 move the same. What are your thoughts? S&P and US30 sort of move the same. They're not 100% the same. But I'll just show you. So I'll just put them side by side because they're two different. I mean, they're two different indices, and the US30 only has 30 stocks in it. You know, top 30 US stocks, and then S&P has 500. So it's a big difference. And then you'll see S&P move a little smoother because they're way more stocks. So as you can see right here, price comes up, and then you'll see right here that there's sharp drops right here. So there's like some pretty sharp drops right here. If you look at S&P, the drops here aren't as sharp, or they're not even like much of a drop. So right here, this is a huge drop, or you know, a range basically. And then you look at the S&P, same point right here. It's not as dramatic. And then again right here, it's a huge drop. S&P, sort of, but not, you can see the huge difference between this drop and this drop here. So this is why, you know, you should probably just pick one or the other. Like S&P is basically US30's little brother. So if you can't afford to trade US30, then yeah, trade S&P. But once you move up to US30, there's really no point in you trading S&P anymore because US30 is way more volatile and it's worth a lot more. So it's kind of like you're kind of playing the double-edged sword because you might be trading the same for both when you could just be doubling up your lot size for either or. That's why I'm always confused when people try to trade every single index because they all kind of move the same. So it kind of makes no sense for you to trade, you know, S&P, US30, and then another one's the German index, the DAX. that as well. So if I match this with the DAX, let's see. Yeah, a lot of people like to match the DAX with the US 30, but it's not exactly the same either. So you can see right here, this is like a huge drop for the DAX. And then you can see here that it kind of went up first for a while before it, so this is where it dropped over here. So you can see right here that it was kind of similar, but not exactly the same. And then right here it went sideways for the DAX while US 30 went up like crazy. But let's match it with GJ. I've never seen GJ match with US 30 before. The closest one to US 30 is probably going to be S&P. But let's see. Yeah, see, it's kind of similar to S&P. GJ is, I mean, it's somewhat close, but not exactly. So again, right here, huge drop for US 30. And then for GJ, I'm going from the same exact price point. See, GJ kind of went up and then went sideways. So that's why I wouldn't twin trade these, because it's just they're not the same. And then right here it goes sideways for GJ, while, or let me see this. So right here, US 30 comes crashing down, right? But if you match it with GJ over here, it only comes crashing down like probably a quarter of how much US 30 comes crashing down, and then it shoots right up. So if you're trying to twin trade these, you're gonna get screwed because they're going opposite directions. So this is going down, this is going up. So I don't know who told you that, but I don't think GJ is the same thing. One way that you can look, here, I have a website for that actually. I'll give you guys a website. All right, iPhone. It's funny, man. I always call you iPhone because that's your name on here, but I don't know what your real name is because your name is just iPhone on Zoom. But yeah, if you want to look at the correlations, just go to my FX book correlation, and then they'll have all the correlations right here. So this is how you'll really know. I mean, I wouldn't go off someone's word with regard to correlation because they probably heard it from someone else that doesn't know what they're talking about. But if you want like the actual correlation, you can just go on here, and then you can look up whatever you're trying to look up. So if you go to GJ, it'll show you what it correlates with. Absolute correlation, GJ, GBP, SGD, the exotic, NOK, JPY, your JPY. It'll show you what correlates, and then it'll show you what it doesn't correlate with. Like GJ and UCAD, to go opposite. I mean, there's a ton here that you can look at. So this would be a better resource for you to look at if you want to see what actually correlates or not. And you can just find this easily. You just go to my FX book and then just Google FX correlations, or I think there's other correlations too. Yeah. And then you can change the time frame too. That's a daily, but then you can change it to like 1 month, the weekly, the shorter time frames. It's really up to whatever you're looking for. And then you can change it right here too. There's like a whole bunch here that you can change it to. There's not just it's not just those specific symbols. There's just a whole bunch that you can swap it with. All right, 6:30. So let's see AU. Let's see what happened here. Nothing. The thing is, so the policy, it probably hasn't came out yet. So they're making the statement right now. So I don't know if they're live or whatever's going on, but the statement's going on right now. Actually, it's going to go on for like the next hour. So we're probably not going to see any movement until like 7, because they're going to start the statement, and then Assistant Governor Ellis is going to speak at 6:45. So it's like another 10 minutes. Let's see. For US stuff, there's usually a link that you can look at. Let's see. You can probably just YouTube it if anything. Oh, the statement's on. It's on August. So the statement's available here on Forex Factory. but you could probably also YouTube it or something. I don't really trade news, so I don't even look at it. But yeah, statement of monetary policy, Reserve Bank of Australia. If I can zoom out of this thing, close. Economic outlook. So literally, economic conditions. Yeah, you can go on forexfactory.com, iPhone, and then you can look up the information here. I mean, but I don't trade fundamentals, so I don't even know how to analyze this stuff. Like I have no background in economics or anything like that. So I mean, even if I do have this information, I don't even know what to look at. So I personally wouldn't I wouldn't trade off it. I mean, it's a lot of stuff to look at. So probably like in the next like 30 minutes to an hour, once the actual real analysts, like not real analysts, but the analysts from like CNBC and those other, trading websites, once they actually look at this and then they analyze it and then they give their own reports on it, then you'll see, whatever spikes happening in the market. But I think right now people are still looking at it because it was just released and it's like 100 pages. So it's a ton of stuff to look at. So if you want to look at it, just go to the Forex Factory, and then go to calendar, and then go to the high impact news, and then click latest release. It'll take you to the website right here, and then you can download the statement. And then you can probably Google when Governor Ellis speaks in about like 10 minutes, or YouTube it, and it'll probably come up live. Yeah, I find I don't know if you live in Australia. It sounds like you might be. So this might impact you personally, but I know when US stuff comes out, it's on YouTube, so that's why we can stream it on there. But yeah, I have no idea how to read this, so I'm just gonna close it. But if you want to look at it, it's available on Forex Factory. The iPhone said AU is dropping. Yeah, I mean it's gonna move a certain direction. See, the thing with this too, like I was talking about, manipulation. This might be a manipulated move too. Like this might be dropping because people are still looking at the statement. So a lot of people don't know what's going on exactly yet until they actually read it. So what happens here is they might be dropping it slightly, but once people actually see what the data says, and if it's actually good, it's going to shoot right back up. So this is why I don't trade news, because I don't know how to analyze fundamentals and stuff like that, aside from the basics. But yeah, guys, so it looks like that's it for all the questions. So if you guys have any other questions, I have this every Tuesday and Thursday at 5 p.m. If we have more questions, I go on for as long as we need to until we answer all the questions. Otherwise, I'll be on Telegram as usual. So if you guys have any questions, feel free to reach out. If you guys need me to analyze anything else, feel free to just send me a message, and then I can send you guys a market chart. Otherwise, I'll be available later. I'm probably gonna grab dinner for a little bit, but once I get back, I'll be here to answer questions. But yeah, guys, thanks for showing up. I'll see you guys again next Tuesday. Otherwise, I'll be talking to you guys in the chat. See you guys later. This will be up shortly on YouTube, so I'll post that up on the Telegram in a little bit. And then once that's all done, I'll send it to you guys. All right, guys, talk to you guys later.